Hello and welcome. My name is Jonathan Stav, and here at Sectors Made Simple, we've created over 300 hours of educational content and unique investment tools to give you the knowledge and resources you need to invest simpler. Today, I want to introduce one of those tools that we offer here at Sectors Made Simple, the Relative Strength Matrix. This matrix offers us a unique way of comparing different sections of the market to find which areas offer opportunities to us. Also, the matrix is the basis for many of the trading strategies that we discuss in our Sectors Made Simple members webinars. So, to give you a proper introduction to this tool, let's take a look at what we'll cover in this video. In this video, we will cover why we created the matrix, what the matrix is, how you can read the information on the matrix, and finally, how we track the changes in the matrix over time. The reason we created the matrix is simple. We wanted to address a need that ourselves and many other investors that we've talked to have faced. It's this idea that there's not just risk and reward in investing, there's also opportunity cost. This idea that putting your money into thing A means you can no longer put your money into thing B or C. Many investors want to be able to compare as many potential choices as possible to make sure that they are not missing out on any opportunities that might not be obvious or instantly apparent. The easiest way to do this is to look at a broad range of companies crossing many different sectors or types of companies, ranging from technology companies to communications companies to energy companies, making sure that we're not missing out on any section of the market that might be outperforming or underperforming compared to the others. But the minute we start doing this, we get into a wild world of comparing hundreds of different companies, and that can get overwhelming and time-consuming. So that's where the matrix comes in. The matrix offers us a way to be able to look at all of these different companies across many different sectors and be able to compare them all in a very clear, concise, and simple way. But how can we actually accomplish this? Well, the answer is much more simple than you might think. We can use sector ETFs as the investments that we look at, and relative strength as a way of comparing those different securities. Let's now talk about what the matrix is. The matrix is a table that compares the S&P 500 ETF SPY against 11 different ETFs representing each of the 11 sectors within the S&P 500. The reason we do this is because the S&P 500 makes up almost 80% of the total value of the US securities market. And by looking at these 11 sectors, we get a complete view of the S&P 500 all within 11 different securities, 12 if we include SPY. So now we know what we're going to be comparing, let's talk a little bit more about how we'll actually compare them. To compare these 12 different securities, we're going to use relative strength. Relative strength is a way of comparing the price of two different securities to be able to find which one is outperforming in any given moment. This is a topic that we've covered in a past video, so if you're interested to learn more about it, check out the link in the top right. But for today, we don't really need to worry too much about relative strength, and instead we can focus a little bit more on how we can use that relative strength. We can use relative strength to create pairs of two different securities, and using a type of charting known as point and figure, again, link to our point and figure introduction video up in the top right, we can find our leaders for both short-term direction, represented by the point and figure columns of X's or O's. X's indicate a positive direction, whereas O's indicate a negative direction. And we also get a second piece of information from its trend, where our point and figure buy signals for our relative strength indicate long-term positive trends, whereas our sell signals indicate long-term negative trends. So that's great. Now we have a single pair of securities and which one of the securities is leading compared to the other for short-term direction and long-term trend. But how do we go from a single comparison to a table that compares all of these 11 sectors and the S&P 500 itself? Well, that's where the magic of the matrix comes in. To go from relative strength to the matrix, what we use is a style of competition known as a round robin. In a round robin, we take one security, in this case our sector ETF, and compare it against all of the other options. So if we had SPY, for example, we would compare SPY against the 11 other sector ETFs. For each one of these one-on-one matchups, we look to find what is the current direction and trend for that specific chart. We mark down if it's in a column of X's or O's for its direction, and if it's in a positive represented by a P, or negative represented by an N for its long term. That gives us two letters to summarize the chart, X or O, and P or N. We repeat this process until we've completed every possible matchup, which, because we have 12 different securities and you can't compare the same security against itself, gives us a total of 132 relative strength charts. In the end, we get a big table that will end up looking a little something like this. Now, your eyes might be glazing over because this is a lot of information and it might be a little tricky to go from this picture to something we can actually use to make an investment decision. So, to help make our lives a little bit simpler, what we do is we add up the total number of thumbs up signals that we have for each one of these sectors. So, for our short-term direction, that would be adding up all of the X's. For the long term, it would be adding up all of the P's, or positive trends. The end result is a table of numbers that we can then use to sort based on highest to lowest numbers to see which sectors are leading or lagging compared to the others. Finally, once we have the total number of positive trend and X counts for that sector, we can add the two together to get its overall score called the total count. It's very important to remember that with relative strength, we get a point-in-time piece of information. That means that we take a picture of relative strength as it stands today. And this is regardless of how the price has been in the past or which sector has had the best 1 week or 1 year performance. It is very much an in the now kind of indicator. This is great for us because it tells us leadership as it stands today, but we still do need a way of tracking how relative strength changes over time. And we have exactly that. Momentum. Momentum is our way of keeping track of how the matrix changes over time to be able to see which sectors are gaining or losing strength. Let's now talk a little bit more about momentum. To make sure that the information that you see on the matrix is as up-to-date as possible, we create a new matrix every single day after the market closes. The market closes, we run all the charts, and then we post what the new matrix looks like for that day. But we don't just take the old matrix and throw it away. Instead, we save it so that we can compare the current matrix against past matrices to see how their relative strength has changed over time. We show all of these changes in what we call the momentum table. The momentum table will look a lot like the matrix, where we have 3 different columns for numbers representing the positive trend, X count, and total counts. But instead of just showing what those numbers are currently at, the numbers instead reflect how the current matrix compares against a historical matrix. Positive numbers on the momentum table indicate that that sector has gained strength in that category, whereas negative numbers represent that that sector has lost strength in those specific categories. Now, if you're really curious and like digging into data, and you're interested to learn which specific charts had reversals, on the right side of the momentum table, you'll find a bunch of arrows, where up arrows indicate a reversal in that specific column. So for example, if you see something that says dash up arrow, That means that there was no change in its long-term trend, but there was a change from O's to X's for its short-term trend. Finally, to make your life a little bit simpler, we offer some predefined intervals for this momentum. You can choose from a drop-down to see the 1 week, 2 week, 1 month, and 3 month momentums. However, if there is a momentum period that interests you, you can also click Custom, which will let you then set a date for a historical matrix and compare how the current matrix looks compared to that historical matrix. Before we end this video, let's summarize everything that we've learned about today. We learned about the relative strength matrix. This matrix is a round-robin style competition that compares 11 market sectors from the S&P 500 and an ETF representing the S&P 500 itself, SPY. By using these 12 different securities, we can use relative strength charts to compare one-on-one each one of these matchups to see which one is leading in the short term, represented by the point and figure column, and long term, represented by the point and figure buy and sell signal. Once we've run all possible combinations of 132 charts, we then add up the total number of wins to get the score for that specific sector. For each sector we get 3 scores: its short-term X count, its long-term positive trend, and its overall score, which is its short-term plus its long-term. Finally, to be able to track how these sector relative strengths change over time, we offer momentum, which is a table that shows how the current matrix compares against a historical matrix. We hope that you enjoyed this sneak peek at how momentum and the matrix work within Sectors Made Simple. If this has spurred some ideas of how you could use this information to trade, post your thoughts down in the comment section below. We'd love to hear from you at how you would use this information to invest simpler. The matrix is available with any subscription through Sectors Made Simple, so if you're interested in getting access to the matrix, as well as learn about the trading strategies that we've created and backtested using the information on the matrix, please check out our website sectorsmadesimple.com, where you can purchase a subscription and start learning how to invest simpler with Sectors Made Simple today.